super panel here for you today. So let's start with a quick round of introductions. Philip, maybe starting with you, just a brief introduction of yourself and the company.
Thank you, Richard. My name is Philippe de Monie. I'm investment manager for Care Property Invest, responsible for acquisitions of healthcare real estate in Belgium and Spain. Care Property Invest is a Belgian publicly listed healthcare real estate investment trust, active for over 25 years, based in Belgium, started off in Belgium, and we started investing in the Netherlands since 2 years ago, and since last year we expanded also to Spain.
Great, thanks very much, Philip. Anja.
Thank you so much, Richard. My name is Anja Dirks. I'm an interior architect with my own office in Utrecht in the Netherlands. We have a strong focus on user-centered and research-driven design and have a strong focus on the care and the cure sector. Besides that, I did several impact functions for the sector, among the presidency for the European Council of Interior Architects over the last 5 years.
Great, thanks very much, Anja. And that impact thing is something that we'll discuss and pick up in the discussion, I'm sure. Ron.
Hi, Richard, thank you. My name is Rowson Bloois. I'm senior lecturer at the Amsterdam School of Real Estate since 2012, both on the Master of Real Estate courses and the executive educations. And in the beginning of 2020, we founded the Senior Housing and Healthcare Association. And I'm absolutely proud to be the chairman of this association. And we are actually forced by all the industry leaders of investors, operators, but also stakeholders like banks. And next to these activities, I've got my own advisory company called Multiple Impact and totally focused on alternative real assets and investments.
Great, thanks very much, Ron. Evelyn.
Yeah, thank you, Richard. I'm Evelyn Fulvin, director of Veen Architects, based in an office based in Rotterdam. We mainly design for elderly people, as well elderly housing estates, but also for people with severe dementia. And I also have an office in China where we advise the government on building for elderly people and also special for dementia. And recently I'm also collaborating with the office Dave Morley Architects in London. And there I collaborate in projects with redevelopments of elderly healthcare projects.
Yeah, I think it's really interesting, some of the trends as well as the investment trends, but also what's happening in terms of design and the demand side, both from government as well as from I suppose the demographics driving this. So really interesting to have different perspectives on the panel. Frederick, just a quick introduction from you as well. Good to see you.
Hello, everybody. Hi, Richard. I'm Frederick Dibb, president of Mosaic Asset Management. We are Paris-based asset management firm specialized in healthcare and senior living. We get mandates from institutional investors to source and invest, advise and invest in that space. We've been doing that for over 5 years now. We manage over 250 million euros of assets across 4 geographies: France, Germany, Italy, and Spain, and are hoping to be launching a fund in the near future.
Great, thanks, Frederick. And of course, if you've got questions or comments on your right-hand side, so whilst you're looking at the screen, on your right-hand side, you'll see that there's a Q&A button and a chat button. Please do use those if you've got questions for us, because one of the joys of it being live is that you can ask us live questions and we can try our best to answer them. So if you've got any thoughts or any comments or questions that you've got, please do put those into the chat and I'll make sure that I bring these into the panel discussion. Frederick, I just wanted to start with you. there's quite a lot of momentum behind the senior living and healthcare sectors in Europe, and that was pre-crisis. But it seems to be building significantly even from there. So how do you sum up the position in the current market?
Well, I would, definitely agree with that. It was already an interesting sector before, but maybe it was really considered as a little bit as niche, as maybe less understandable, less accessible to investors who were focusing on the much larger areas of offices, retail, etc. I think, as everybody has realized, that they needed to be thinking a little bit outside of the box and waiting. By the time that the dust settles on what is going to be the future for office building and retail, etc., trying to find alternative investment. And because the differences in size is so large between these two sectors predominantly, and the alternatives one, any sort of small shift is quite a big shift for us. So yes, we have seen a lot of demand from investors, whether from within Europe, but also maybe slightly more surprisingly from outside of Europe, Middle East, Asia, predominantly, and even the US have always been there. They were there quite some time ago, and maybe also coming back.
Okay, good. I wanted to pick up a bit with you, Philip, just as well. Are you seeing? I mean, Frederick then mentioned a sort of growing interest from investors. What are you seeing in terms of the capital? Are you seeing more or different investors beginning to look at the sector?
Definitely, Richard. We've been looking into the sector for 25 years already, and typically you had the same type of competitors, being healthcare real estate investment funds specialized in healthcare real estate. But recently, pre-crisis or pre-COVID, but also definitely afterwards, we see more different types of investors. We see family offices, we see pension funds, we see insurers, and I think the reason why is quite logic. As you know, interest rates are down. At least they are for the moment still in Europe, and so insurers need to provide certain returns on their products, and they're looking for long-term stable cash flows, which offer some decent returns. There's not a lot of sectors anymore where you can get that, and healthcare real estate is one. So I think that's why we see a lot of competition from them recently.
Okay, good. And Evelyn, I know you're doing quite a lot of work, not just with developers, but also with pension funds and various others. And you've been in the sector for a while. I suppose, how are you seeing the growth in focus, I guess, from investors, but also developers in this area?
Well, I see also a big growth of investors and also. Well, in the Netherlands, but I think the whole Europe, there's not enough apartments or senior living housing. So, what Philip also was pointing out, it's a very stable investment because we know that the elderly people will at least, because they are getting older and older, they will stay very long in these apartments. So it's longer than young people. Young people, they move or families move, but it's a very stable market also because, elderly people live for a long time in their apartment. And and also in the Netherlands, we don't have enough housing. So we have to build for a lot of new apartments because we have to make place for families who should live in the houses where the elderly people live now. So it's there are long lists of elderly people looking for good apartments.
Okay, so from a demand point of view, there's a key driver there. Anja, I just wanted to pick up with you. I'll come to you in a second, Ron, on some of these topics. But Anja, I just wanted to pick up with you. you know, if we stand back a little bit and look at some of, I guess, the sort of developments that we're going to be seeing, what sort of facilities, I guess, are you looking at the moment in terms of the demand side for dementia and for senior living? What's required, and what do developers need? What are the key aspects of it from a design point of view for those occupiers?
Yes. Well, it's a very good question. We have to realize that people with disabilities, and dementia can be seen as one of them, have a very high demand on their direct environment. And rather than only the hard technical or financial part of real estate and building the bricks on top of each other, we have to take focus on the end user and what are their needs, and also in a long-term strategy. So it's not only about living, it's also about providing the care, and these demands of care are growing rapidly. So if we see that elderly people with dementia enter in a very high stage of dementia the building, it's almost more about, well, it's not a hospital, but it's a very high level of care, and we have to take that in account as well. And in the meantime, thinking about 20 years ahead, so what's after, if this large group of elderly is gone, what to do with the buildings.
Okay, good. I'm going to pick that up a little bit more as well. Ron, I just wanted to pick up with you on the demand drivers, pick up on any of the points that have come up so far. But also, what are you seeing at the moment in terms of demand? Obviously, has the demographics changed significantly? Are we still, I mean, we heard there from Evelyn that the Netherlands was behind in terms of the number of beds required. Is that the same sort of story that you're seeing across Europe, really?
Yeah, and also I would like to contribute on the smart answer of Anja, because I think it's very relevant to divide different type of target groups. Because when we speak about healthcare real estate, I think in general we could divide it between care and cure. But when you look at the care perspective, it really starts with senior living. So it's really actually a residential product. And when we move upwards, also with terms of care demand, we come up to nursing homes. But we also see much more mixed developments. And I think this is also a pan-European trend that because of scarcity of land, for example, in cities, we should make mixed use developments like mixing senior living with nursing homes or with primary care facilities in the neighborhood. And I think this is also aligned with the demand of consumers to have those type of facilities in your neighborhood. And I think also when we speak about this topic, it is actually also one of the drivers of the foundation of the Senior Housing and Healthcare Association to work on these definitions. Because when operators, investors or developers are working closely together, it's really sometimes difficult to understand each other, even when we're working on a pan-European scale, because the demand in the Central Eastern European countries is something totally different than the mature asset market in the UK or in the Benelux, for example. So being aware of local demand is important. And I think one important element is legislation, because legislation is changing quite rapidly. And what Anja was told before, I think residents in general would like to stay as long as possible at home. But what's the definition of a home? Because when you're, for example, 70 or 80 years old, I think consumers in nowadays are really happy with their own lives. So it's not about taking back in the past like 20 years ago. So it's really about making inclusive neighborhoods where seniors, students are working closely together or actually living closely together. So therefore also the focus on senior housing is more prominently.
Okay, good. That's interesting. And Frederick, from your point of view, I mean, I know that one of the issues with the Senior Housing and Healthcare Association was exactly that terminology that Ron was talking about. How much of a challenge is that for you, particularly when you're looking cross-border?
Yes, it is challenging because it's true that people have different definition for the same word, and they will not understand it in the same way. And you can sometimes actually go quite a long way if you didn't think about defining that at the outset in a discussion with an investor before he realizes that actually it wasn't exactly what he had in mind. And so yes, senior living does not mean the same for everybody. Some of them go for it, and they have in mind the nursing home. Some others have in mind actually the tourist sort of long-term tourism, and frankly it's completely different. Actually, maybe investors not always, I'm not gonna point the finger, but developers, for instance, can get it quite wrong in terms of what market they are addressing, and of course the end customer is not at all the same when you have a developer out of Greece calling you and saying, I have a great spot for a senior living, and he has in mind maybe to transform to restructure a resort for sort of 60 plus, and of course when you talk to another developer a bit more specialized, and he's talking about senior living, and maybe he has in mind nursing home. We were talking about the time that the residents spend in a home. Of course, in a nursing home or care home, it would be 2 years or even less. So and in a senior home, sort of assisted living, it would be 7-8 years. And so it's a completely different market. It's a completely different building. It's a completely different touch and feel. Yeah. So there are you have sub markets within this overall definition that we are trying to embrace at the SSHA.
Yeah, and I know that's something that everybody's going to be working on to try and help that, just in order to create more transparency, I think, which will be one of the key things for the market. I'm just going to bring up a couple of things from the chat and from the Q&A. One's from Martin. Thanks very much for joining us, Martin, here, which is, how much will the senior living and elderly care sector reimagine itself after COVID-19 for both investors and demand? Do we see there being a large scale reimagining of it? Has it led to any particular changes? Philip, maybe your view on that?
I think it has. What we notice from the investor point of view is that operators, they a lot more than before, they want to have future-proof buildings. What is for us future-proof buildings? What does it mean? It means higher number of single bedrooms, but mostly that flexibly built structures, let's say, so that in case of to actually accomplish two things. One, they want to create a smaller living unit within a bigger unit, let's say. So in the nursing home, it's not you have 150 beds, but they will make different living units so that people will not have the feeling that they're just a number. The second thing they want to accomplish with the flexible structure is that in case something happens, like we saw with the COVID pandemia, that they are able to easily isolate or compartmentalize part of the building to avoid spreads of an infection or of a pandemic throughout the whole building. That's indeed something we clearly see as a result of the recent crisis.
Okay, good. I'm just going to bring up a couple of things from the chat here. So first of all, Camille Bonneau, thanks very much for joining us. And the answer to that is yes, the presentation will be available afterwards. I haven't got it at the moment, but I'll make sure that we get it and that we put it here. Also, just a couple of ones here, which are on just in terms of design. So this is a design one from Dalit. Thanks very much for that. Do you see new methods of designing and initiating projects? And Dalit also there points out whether that's new financial models, different designs. I don't know whether anybody wants to pick up on those topics, whether that's from the design or from the financial modelling side.
Well, maybe just some words on that, and going back to Philip's point, also about future proof. I mean, I think what this has done, this pandemic has accelerated. There were already sort of discussions and design and experience about maybe and Ron was talking about this as well, about sharing, co-sharing, sort of co-living for seniors and smaller places, and sort of mixity of population between maybe older and student and older generation, all these kind of things. I think this pandemic has accelerated this this movement of saying maybe the model of the 150 beds, or even I'm talking nursing home here, and dementia care, is that you can see in some countries, maybe not in the Netherlands actually, but that you have seen in Germany, where you had even larger homes of 200 or more, is way past, and we really have to go back to really much smaller units. And this was maybe also not completely considered by the investor community, because it's it's smaller size assets, so it's maybe less interesting. But I think that the pandemic has also put an emphasis on really trying to develop these kind of alternative ways of taking care of dependency.
Okay, good.
Maybe I could add as well that in the Netherlands, because of COVID, of course, many older buildings are not safe enough anymore, and we found out that there's still very old buildings where the ventilation or the installation is finished. In the Netherlands, we have so many 70s buildings with old installation, and they need to be redeveloped very, very fast. And I think that's in the Netherlands is going to be a huge task, to demolish them and to build. And then I think what Ron was saying, then we choose as well to make them less institutional, more homely, smaller scale, and still service for the neighborhood. Because we see also that many of these complexes are based in a community, and they are important for the community because they serve also meeting places which are still very vital, especially in the cities. It's very important that these buildings have also their function in the neighborhood. So including a small pharmacy, maybe even a daycare, or all these facilities and a mixed use is very important.
I do hope, Richard, that we've learned something from this crisis as well, as we have experienced what the effects are on well-being with ourselves by staying so much inside. And I hope that we do realize that the more fragile our end user will become, the more important it will become that they have access to outside space. And this is often something we forget. So maybe in general in investment, it is not only about the bricks and the building, but also thinking about the outside space and the role it could have in there.
Yeah, no, I think that's actually a really interesting point. And I must say I hadn't thought about that, but you're absolutely right, of course, that that feeling that we've all had of being restricted to our homes, there is an element of that for sure in some kind of elderly care settings. Ron, I want to pick up those topics in a minute. A couple of quick things that have come through as well. One is from Mathilde. Thanks very much, Mathilde, for joining us. What's the difference in return or yield, however you want to put that, between specialised healthcare and elderly or senior care? That can be either you, Ron, or Philip or Frederick. But is there a big difference in terms of yield or return that you're expecting?
Yeah, well, I think that it's a smart question, and then I think you should be aware about the differences between geographics. So you can't compare yields from the UK with the Netherlands or an emerging market, for example. But I think in general, there's a spread between maybe 1% or 1.5% between more senior living residential or specialized nursing home care. But of course, this is a very dangerous one-liner for myself, because in the end, it's also about what's the product. And I think affordability is very important. So that was also one additional comment from the business case perspective of new types of concepts. I think we see a variety of consumers, and also in terms of affordability. So high-end concepts with a lot of services, for example, both on senior living and nursing homes. And of course, it's always about the economics. So when we have a lot of demand and a lot of competitors, you see yield compression. And of course, when we take back over the last 10 years, there's quite some significant yield compression. And therefore, also investors are working more pan-European, because I think from an investor perspective, it's very smart to have, well, a very balanced strategy on investing in maybe both residential and long-term nursing home, but also have a geographical spread. But that's also a $1 million question, because being a more residential investor is something totally different than being an operational investor more on a nursing home. And also takes totally different knowledge of your asset class, your end user. And I think this is also a very interesting topic for the discussion. What does it take to be successful on the investor side on nursing home, but also on the residential side? Because I think in general, being investor on senior living, you should be aware of not having a master lease, but having individual leases with consumers. And of course, big REITs are sometimes more focused on long-term master leases. These are totally different worlds.
No, that's interesting. And we can for sure pick through some of those. A couple of other things that I just want to tackle. Tim Chowdhury, thanks very much for this question, Tim. And it picks up actually the point that we've been talking a little bit around mixed use here and repurposing. And Tim's point is that isn't this already happening, in the US as a trend with vertical buildings for health? And is there a potential for the impact on the retail sector, maybe to see more mixed use repurposing of retail premises, perhaps into some of these kind of senior living or healthcare areas? And there's certainly been some discussion about that in the UK. I don't know whether that's something that you're seeing in the markets that you're working in. Frederick, is that an area where there's an opportunity to maybe work a little bit more in terms of mixed use?
Sorry, which one?
I mean, I'm just wondering whether or not if we're creating more mixed use environments, right, whether or not there's opportunities then for senior living to go into that, perhaps healthcare facilities. Is there a move more towards that kind of mixed use and urban?
Yeah, definitely. I think that's what I was sort of alluding to before. Is that it well, again, it depends on the market. In the Netherlands, it has been a little bit more the practice. We have in Germany, for instance, there are some cases where they had that. In France or in sort of more southern countries, regulation has prevented actually sort of that mixed use. So of course, you have to take into account the fact that regulation being different and history being different, you can't again have a general definition or a general comment. However, it is true that by I think the trend to go into smaller sizes for sort of these units of people and taking care of similar type of need or dependency it's better for the end user, but I think you also have, and operators need to keep in mind, and investors, the need for critical mass, and that was mainly the reason for much larger sizes buildings. And so I think by doing this mixed use, you keep sort of the smaller size, cocooning aspect, and more personalized service, but you have a community of general services like catering or laundry services, or even sometimes maybe sort of general management or facility management for the building, etc. And so you gain a little bit of critical mass there, and sort of the marginal cost is lower for each individual sort of operations. So yes, mixed use is really something to look into. Then again, this would require for investors to be a bit more open-minded, or not narrow-minded, but sometimes investor can have sort of a defined strategy into a specific type of destination, and so the mixed use would require them to be more open-minded towards sort of these diverse destinations, diverse type of facilities and operators.
Okay, good. There's a couple of questions also. I mean, that picked up that area of conversions. I guess how much of it is practical, Anja, in terms of conversions to create the right sort of facilities, or how much of this needs to be new build really, especially if we're getting, I guess, more information, more research, more data about what people need in terms of the interiors of these areas.
Well, there are two ways to look at it. If you look at the national context for the Netherlands, we could argue that transformations from older buildings into nursery homes, elderly housing, or senior housing, there's often a lot of square meters that can be used. It could be an advantage, but the downside is, of course, that you have to take account, like Evelyn pointed out, the old installations and the old physics of the building. In relation to the new build, there's a lot more flexibility and designing from the new insights. So this is also a big asset to go for.
And Ron, from your point of view, this is just a quick question that's come in from Douglas Edwards. Douglas, thanks very much for joining us. To create a portfolio in today's market, do investors have to take forward funding or development risk due to the volume and quality of standing investments? That's quite an interesting one from Douglas there. What's your point? And again, Frederick and Philip, if you've got a view on this, please do share.
Well, I think there's no need for forward funding, but I think there's a variety of different types of institutional investors there, and I think it's also about being a colorful spectrum, because I think you've got investors with maybe a long-term perspective, like 30 years, or a buy and hold strategy, for example, the REITs. And I think there are also opportunities for more added value. So a bit more higher risk, for example, redevelopment of existing stock. And in the end, it's always a cooperation between an operator, a developer, and an investor. And then you have to look at the business case and whether it's interesting to do forward funding or not. But it's not really, to my opinion, the showstopper or the most important element. I think it's more like there's a differentiation between different types of questions and also different types of risk yield combinations, you could say. And maybe one additional remark also on the previous question, because I think it's very important to distinguish that we have city developments with bigger numbers, but also rural challenges. And I think one of the biggest challenges in the pan-European level is that seniors are living everywhere. And for example, in general, on a pan-European scale, we have roughly 25% of all the inhabitants are 65 years and older. But the biggest problem is they don't live in all the big cities. So having real estate in, for example, Berlin or Paris or London is something totally different than being in a small neighborhood with only 10,000 inhabitants, but where you have also the aging demographics. And I think this is also one of the challenges where we have to cooperate very closely with local governments, investors, operators, but also the built environment.
And Philip, what's your take on that? And Frederick, I'll come to you in a second.
Well, I think Ron is right. Indeed, there is a lot of people, elderly people living, let's say, in rural areas. On the other hand, what we do notice is that typically, I'm talking about nursing homes now, they are typically located in urbanized areas, let's say, let's call it city centers or the suburbs. And it is because they're the kids or the children of the elderly people work there. And typically when they have when they put their parents in a nursing home, they want to have them close by. But we see there's a twist. Like the elderly people himself, he wants to stay close to where he lives. So therefore, there are some nursing homes, let's say, more remotely located, but the majority is located in urban or urbanized areas, and that's where because their kids live there and they want to be close to their parents in order to be able to visit them on a regular basis.
Okay, good. Another one here actually from Douglas, just because Frederick, you may be able to pick that up in any thoughts at the same time, which is Douglas would be interested to know in the service offering and cost for senior housing. That's quite a big topic, but I suppose, are there any guidelines in terms of in terms of that, the service levels and costs, Frederick?
I just wanted maybe to pick up something on what Ron said and Philip. This point about where for an investor, where they should go and what they should buy in terms of assets and what is interesting to them. It's true that as I was saying, a lot of these new investors are coming from sort of more traditional real estate sectors, and yes, and they have the mindset of location, big city, and that's where we want to be. and sometimes it's true that maybe there's a bit of an education to be done, in the sense that seniors are not only in big cities. They can be, but it's a different side, different maybe type of care as well, and not exactly the same facilities. But but they are also, and in large numbers, outside of those very central large cities. And so there's a bit of education to be done there in terms of, so that these investors would feel comfortable in investing somewhere different than what they have used to do in maybe office or retail or even residential. To your point about cost and level of service, well, frankly, that's what is interesting, is that we see different operating models, and again, I don't think there is any truth. Different operators are trying different models. Some may suit to certain type, certain age, certain pockets, and others will be different. But what is interesting is, yes, there is a variety, and you can go from even from the way that the specification of the building, from like 200 or 300 common space in a 100 apartment residence, to 1,000 square meters of common areas for the same amount of apartments. So you can see there, just from a square meter perspective, that the operator will have a completely different focus. Of course, you have to pay for these square meters. You have to pay for the people you will put there to render these services. But I guess that's the law of the market, and that is quite good, because of course there should be a lot of diversity of offerings.
I think if I may add to that, oh, sorry, Evelyn.
Yeah, maybe it's interesting that there's also a new generation of elderly people coming who want to organize and look after themselves and organize also a community. For example, I'm involved with 2 very big developments where I designed together already with the elderly people. It's called the Knarrenhof, and there's another development, Ubuntuplein, where actually the whole design of the development is together already with the elderly people, and then we design in this community also square meters, which they are going to organize themselves. They are going to run a restaurant. They are going to run. Also, we see now elderly people who never want to stop working and who want to have little working spaces, and they want to organize it themselves. And of course, they have to. It's going to be included into their rent. Somewhere it has to be paid off the square meters. But it's a sort of self-organization. And I think that's quite interesting because I think there's a new generation of elderly people don't want to live in this institutional environment anymore. They want to have their own space, freedom, and they want to organize themselves. And I think that's also what is the movement towards the Netherlands, that also our government is expecting that you are taking care of your own health and your environment and your more responsibility. And I think that's I think that's also in Denmark proven. I think that's a good movement.
Good. And Philip, you wanted to pick the point up as well.
Yeah, I was going to add to Frederick. Basically, the operating model or service level of operators or different types of healthcare assets, it depends a bit from region to region. Because, for example, in the Netherlands, you have really the small living units. Even I wouldn't call them nursing homes, but like typically they are very small, like maximum 20, maximum 50 beds. Whereas in Belgium, that will totally be unaffordable, not profitable at all, and that's because of the fact that if I'm not mistaken, but Evelyn and Anja and Ron, you will know better than I do. I think the average cost in the Netherlands to spend or to stay in a nursing home, that costs between 3,000 and 5,000 euros. Well, not a lot of people have that available. The difference is that the subsidies that the operators receive are quite very high in the Netherlands, whereas in Belgium and in Spain they're a lot lower, and so there you need the prices are lower for your stay as a resident, but that means you need more size. But that's coming back to what I said earlier. In those type of countries where the subsidies are lower, we see that the operators try to arrange smaller living units within a bigger unit.
Yeah, it's interesting. There was actually a comment earlier in the chat from Jan Thijs Costa. Thanks for that, Jan Thijs, which is small assets will not contribute to decreasing healthcare costs, which are rising in all of Europe. Is the strategy of Corien and Orfair both acquiring smaller care homes in the Netherlands fit for the future? Is that a trend that we see for the future? Maybe Ron, you're our Dutch specialist here.
Yeah, and also a question from one of the institutional players in the Netherlands. So thank you, Thijs. Well, no, I think it's a solution for just a part of the playground, because indeed there are only a few consumers who can afford to pay like 2,000 or even 4,000 rent per month. And therefore also my suggestion was to focus on the middle rental level in terms of 800 between 1,200 euros per month for maybe 55 square meters apartment. And I think that's also where the biggest numbers are, because in general the seniors are very keen on their money. So I think they've become richer, but it's not a no-brainer that they will spend it on their rent. So it's also about attracting consumers, or actually attracting seniors, to move on from their dwelling to a small size residential senior living complex. And it's also about mindset, because I think in general seniors, they don't want to move towards a healthcare residential building. They would like to move to residential building with like-minded people. And that's also where it comes to branding, but also the design question, to make attractive real estate for seniors. And that's really the beginning, because in general we weren't focused on seniors as a residential consumer, but I think this is one of the biggest strengths. And also that's where the biggest numbers are. So coming back to the question, I think small scale nursing homes, it's a part of the demand, but I think we should focus on solutions for the big numbers. So in terms of how can we make inclusivity for seniors within the existing real estate. And I think one of the biggest challenges is the existing stock, because this is also a problem, because a lot of money is in the existing stock. But indeed, because of COVID-19, we are totally aware of the quality of the existing stock. So therefore, I think there are a lot of opportunities for redevelopment, but also diversity in terms of type of product.
Sorry, yep, if I may, Richard, but I think this question really puts the finger on the complexity of that sector that actually has a lot of subsectors. Saying Orpéan and Corian are moving into smaller scale, and is it going to solve the issue of healthcare costs? Again, it depends on exactly what type of segment you're targeting, and of course they are not saying, I don't think Corian and Orpéan are saying this is the future and this is the only future. I think it corresponds to a certain type of customers who want a certain type of services, and maybe for a certain period of their time, given a certain state of their dependency or their good health. And so these operators, they have to be able to sort of offer a diversity of scarce solutions or home solutions to the public, and I think that's what they do. And again, also, you can't just take the economic argument and say, because it's cheaper, this is what we have to build, and then they'll come. You have to also take into account, well, and this is what Evelyn and Anja were saying, is that it has to be customer centric, and you have to think about the end user and what he wants. And of course, then you'll put into the equation the cost and the economics. But there are also ways, by outsourcing services, by, as I was saying, having and as Philip was saying, you have smaller units, maybe of different operators, different type of care. So you have centralized services. But so it's cheaper for the marginal cost. If people want to live in smaller units, then at some point someone will have to give them that.
Yeah, can I add something to that? Oh.
No. Yeah.
Okay. There are two things that come into my mind. This is this definition of what is senior living, elderly living. So we have to point that out. But it's about variety. So I make more to choose from rather than one fits all like it used to be before. And the other thing is that we should consider real estate to be much more than just bricks, like I said before. It could be even a caretaker. So in terms of layout, daylight and everything, if you combine this research-driven design, the building can be much more in terms of layout. We have investigated that if you lay out a building differently, it can save half the miles from a caretaker to go to a patient or to somebody living there. So it's also in the smartness of the building to think about how we provide care and how we keep the money in the healthcare a bit under control.
Yeah, I agree also with Anja that we should, and also what Ron was saying, how do we attract people to move out of their dwellings? And there's also a growing of single market in the Netherlands, which is also very important because it's not that we have to design all the time now for couples, but actually the single market, especially in the cities, is really growing. I think it's almost, I think 60% is going to be single. And there will be also groups who want to live maybe together, like two friends, or there's already in Amsterdam, there's a new project starting, it's called Friends. And like maybe elderly people want to live like how students live together, and they don't need all their own huge kitchen, but maybe they share a kitchen and they have a small pantry and they order the food. So I think we have to really be open for what the market is asking, what the new generation is asking for. It's moving very fast now.
Yeah, it's interesting to see how some of these trends have moved just even in the time that I've been looking at the market, which is only kind of 18 months really, when we've been looking at it, I suppose 18 months, 2 years, and just the speed within which this has moved is incredible. Now we've got around 8 minutes and 30 seconds left, so we're going to have to not be polite. So if people have got something to say, then they should say it. And if you've got a question you want to ask, now's the time to ask it, because otherwise I won't be able to answer it. So let's just pick up. I just wanted to pick up on the investment side, particularly looking at the differences in the areas. Philip, what are you seeing in terms of Spain? How does that compare with Belgium, for example?
I see different things. First of all, I think in Spain, even more than in Belgium, elderly people have the idea in their head, I want to stay in my own home as long as possible. So as a result, the senior housing concept is not very popular. I think slowly but steadily there is some change coming, and it will become more popular in the future. Whereas in Belgium, people have the same mindset, but actually we have a lot of senior living infrastructure in Belgium. Actually, there is an oversupply. There's a lot of senior living apartments that are not full, not occupied. So that's one thing I see in Belgium, Belgium versus Spain. The second thing I see is that in terms of from the operator side, Spain is let's say a couple of years behind, because in Belgium and also in the Netherlands, what we saw is, and in France even more, what we saw is really a consolidation in terms of operators. All the family businesses, well, they're still family business run nursing homes, obviously, but a lot less than, let's say, 5 years ago. And the consolidation has gone very fast, and it's starting to happen in Spain as well. And it's actually being strengthened or fastened as a result of the COVID-19 pandemic, because a lot of the family business-owned nursing homes in Spain, they really suffered operationally and financially as a result of the COVID-19. There's probably a risk of, well, not probably, but there's definitely going to come regulation that will further burden the costs of operating nursing homes throughout Europe, but specifically in Spain. And I think as a result of this, we will see a further consolidation in the Spanish market really soon.
I mean, that's interesting, that idea of consolidation. Are we expecting to see that more? I mean, certainly we're expecting to see it in other areas like leisure and hotels, where some of the smaller hotel operators will drop out post-COVID. Is that something that we're also expecting in this area? And I suppose, will that boost the professionalism overall within the industry?
That's definitely what I expect that will happen, yes. And yes, I think it will boost the professionalism of services and quality of services, yes.
And I just wanted to pick up on one thing that came up in the chat as well, which is on, I mean, we talked a little bit about impact investment, but the question was how does the sector contribute to the sustainable development goals, which is one aspect of it. But I'm also interested just to get your view on, there's a huge raft of regulation coming through, particularly in Europe versus, let's say, the US and Asia, which is very positive in terms of ESG, but also, all of these areas around sustainable development and impact investment. Is that something that's actually going to, in a way, help boost this sector because it fits very well within that criteria?
Yeah, maybe Richard, I can take this one because I think in general investors are searching for asset classes with a low correlation on economic cycles. So healthcare real estate ticks all the boxes, actually also on the E from environmental, social and government perspective. And I think the capital flows are going to the impact side because pension funds are very aware of their contribution on society, but also family funds are aging themselves. So they are searching for purpose-driven investments, and therefore I think senior living, healthcare real estate can make the differences, and also both on environmental, because I think environmental should be a no-brainer. Being Paris-proof is actually a no-brainer, but I think the social perspective is very key. And I think it's also maybe representative because I think it's the first time that we have an expert panel on investment briefing on senior living and healthcare, where we have a diversity between developers, the more evidence-based, research-driven perspective, but also asset management and investors. So I think it also represents how we tackle this society challenge. So I'm actually also quite happy as a chairman of the Senior Housing and Healthcare Association to listen to the discussion, because I think it's very, very colorful and also gives insights about complexity, but also about the multi-stakeholder perspective.
Yeah, no, I think that is interesting. We've sadly only got about 2.5 minutes left, so I just want to just get some final thoughts from everybody, both in terms of what you see as, I suppose, the key trends that we should be looking out for, but also for those who are on the investment side, where you're seeing the opportunities at the moment, where you think the most interesting opportunities are. Let's start with you, Anja, on the big trends that everybody should be thinking about.
I've mentioned before, it's diversity, variety, much more on living and housing rather than only the care or the cure. So these are, I think, the main, and really think about user-centered, so from inside outwards. Okay,
perfect. Evelyn.
I think the most important thing is how can we develop good quality houses with good daylight, outdoor space, and also flexibility that people can adjust their own environment because they have to live there for a long time.
Perfect, great, thanks very much. Philip.
I agree with what Anja and Evelyn said. I think trends are that it needs to be more customer focused. As an investor, I want to say that's true, and but the balance should be found also between obviously customer focused, but also profitability, because in the end there needs to be operators willing to take care of our elderly people, and in order for them to be willing to do so, they need to make some money. And that's why I believe in mixed use and so on, of course, but creating smaller units in larger units.
Okay, super. Ron.
Well, I think when we would like to make the next step for impact investing, we should focus on the performance and valuation of ESG. Because I think this is quite key. When we can make a valuation of the impact of the S, so what's on the future value of your asset, then I think impact investing will be the topic of the next 25 years.
Great, thanks very much. Frederick.
Well, I mean, I think if we're going 25 years, I think, you know, the joy of that market and is the demographics, frankly, and is the fact that we can foresee for the next 25, 30 years, you know, solid growth, and of course then you have to look into all these niches that we've talked about, but I think this is the overall theme.
Great, thanks very much. Really interesting discussion. Thank you to all of the speakers. Really interesting. Thank you for your questions.